Hey, kings and queens, it's Sandra Fenwick, your mortgage expert. I hope all is well. I wanted to come and do this video about qualified mortgages versus non-qualified mortgages. You say what that means, Sandra? You'll hear terms thrown around like QM, non-QM, and it just means that just the type of loan you can get based upon your personal circumstances. Again, I've mentioned in a previous video that I am a mortgage loan originator and I am licensed through a brokerage, mortgage expert. And through this brokerage, we have access to several different programs, several different banks. I'm talking about in the hundreds. So most likely, if you have a unique situation, we may have a loan program for you and we may be able to get you into your house or we may be able to get your loan refinanced. So we have anywhere from investment loans, loans for self-employed borrowers. We have loans for your traditional folk. So qualified mortgages, or QM, is just your regular standard mortgage. You can get it through FHA, VA, USDA, your government loans, or you can get the program through Fannie Mae, Freddie Mac. They have a few different programs there. And those are just traditional. We call them full document loans. We need all of the traditional documents like your pay stubs, bank statements, W-2s, tax returns, all of those good things. And we determine your interest rates and everything, your down payment. For your VA, there is no down payment. USDA, no down payment. FHA, 3.5%. Fannie, Freddie, if you're a first-time home buyer, it can be as low as 3%. If you're not a first-time home buyer, then it could be 5% or more. So those are traditional QM loans. Now, non-QM is where we go into the shady areas of a person that says, I have the money, I may have the credit, but this is my circumstance. I am self-employed. When I file my taxes every year, I do the Trump special. I have a lot of stuff I have to write off. I have a lot of expenses. So at the end, when my taxes are done, it makes my my income look very minimal. Now, you know, if we're doing a self-employed loan, we have to go by what you report on your taxes. That is your income. So if you didn't report very much, then that may mess up your debt to income ratio and you may not be able to get the home that you want. So you may be making $10,000, $15,000, $20,000 a month. And it's all being deposited in your business account or your personal account if you're a business like me. And you may say, I make this money, I have the money to pay a down payment, I just can't get a traditional loan through a traditional bank. So that's where your mortgage experts queen come in and will help you out. Now, sometimes these loans require more down. It could be 5, 10, 15, 20%. Just depends on what you're trying to get and what the type of, and what your circumstance is. So we have bank statement loans. That means you show us 12 months or 24 months of your bank statements. Show us all of your deposits going in. We're going to take those deposits and the average over that 12-month time period or 24-month time period, and then we're going to say this is what your income is based upon the average of how much money is going into your account. So that's how that works. And that gets you in your house. And a lot of times these loans have a higher interest rate. So if you can go the traditional way, you may get a 3.5%. If you got to go non-QM way, you may get a 5, 5.5, 6. So it just depends on how much you want this house. Having your own property and paying into your interest, that comes back to you at the end of the year. You can write off your interest at the end of the year. This is your home and you own it. It's your property, it's your investment and you own it. So a lot of times the trade-off on that slightly higher interest rate, it's worth it. It's better than throwing away money on rent every month. So we do have products and programs for you. We have bank statement loans. We have loans that you only got to use your profit and loss statements. And that's for the self-employed borrowers. We have 1 day out of bankruptcy loans that you can get just in case you don't want to wait that 2 to 3 year period. You say, hey, I got this extra money I want to put down. I can put down 20%. I want to get my house now. Then we say, okay, let's do this one day out of bankruptcy, one day out of foreclosure loan. We have a one-time close loan for your, if you want to build a house. We got a loan that will allow you to purchase your land and finance the build of your home all in one loan. And you close one time, one set of fees, and that money is distributed the way it needs to be distributed. So let me know if you have the money, you're okay with paying a little slightly higher interest rate, but you do want to get your house now, but you went to a traditional bank and they told you, no, we can't help you. Let me know. Give me a call. We can talk about your situation. I can check around with our resources and see what we can do to help you get into your house. So again, give me a call, you guys. If you need me, you have my cell phone, 301-326-7555. Inbox me on any of my social media platforms. Please, if you feel like this message was helpful, please like it and share it with as many folks as you can. If you're on my YouTube channel, subscribe. Okay, hit that thumbs up button, guys. Look, that's how my son watch a lot of YouTube, and that's how you do. Guys, hit that thumbs up to make sure you like my page and you leave a comment below. All right. Thank you for being here, guys, and thank you for listening. Have a great one. Bye.